Hello everyone. Today we are going to start amalgamation of companies which is covered under Accounting Standard 14. Let's begin. So first we will study the meaning of amalgamation and its advantages. In an amalgamation, two or more companies will combine to form one company, either by merger or by one company taking over the another company by acquiring the shares. Okay. Here we have to note that at least there should be two companies uh, to do amalgamation. It can be more than two. It can be three, four, five. Okay. These companies will come together and their assets and liabilities will be transferred to new company and they can do amalgamation. So in an amalgamation there are various benefits. So in order to get those benefits, companies does amalgamation, and we have to understand that amalgamation is a strategic move of the business and there is no compulsion as such. If they find benefits in going for amalgamation, then they can take the decision and they can do amalgamation. Or if they don't find any benefits, then it is not necessary to go for amalgamation. Here I have listed out 6 benefits of amalgamation. Number one is economics of large-scale production. With the amalgamation, 2 or 3 companies will come together, so they are in a position to produce large number of products, and thereby the cost of production of each unit will come down, and their operational costs will also come down, and it helps them producing various outputs or products in a much cheaper rate. So it is called economics of large scale production. Avoiding competition. With the amalgamation, if there are two companies in the market competing with each other, then there is a high chance that they both will suffer losses because of this competition. So in such a scenario, if situation permits, then they can go for amalgamation and avoid such kind of competition where both the company are losing. Right? So this can be also an advantage of amalgamation. Increasing efficiency or managerial effectiveness, right? Different companies has different managerial skills. One company's managerial skill may be much better than another company. So in such a case, once amalgamation is done, the companies having better managerial skill can help the company having inferior managerial skill to improve their efficiency or effectiveness, right? They can have better training under them, and thereby companies' efficiency and effectiveness will improve a lot. Managerial skills are generally a way to attain company's objective. They know how to plan, how to execute, and how to achieve the target. Next point, expansion of the business or diversification. Sometimes when company wants to expand their business, either in same line of business or in different line of business, which is called diversification, then amalgamation is one solution. Instead of investing in totally new business, they can acquire companies that they want to invest their money upon, right? So this through amalgamation it is possible. Revival of sick units. If a company is not performing well and uh, and is suffering losses from years to years, then to revive such business, an amalgamation can be very helpful. because in because if a company has good market share and is doing well, and if that unit is amalgamated with one company which is performing well in the market, then they will unit will get better resources, market share, managerial skills. Because all these factors, it will help SIG needs to revive as early as possible. Okay. Now, last point is tax advantages. If a business is merged with SIG then SIG generally has lots of losses, right? Those losses can be carried forward, and thereby new company can take various tax benefits from such losses, and thereby it helps new company to uh, tax planning or tax saving. Also, if an amalgamation is done with company having subsidized tax rates, then that is also helpful for the new company to save taxes, right? So these are six advantages of an amalgamation, and there are many more, and I will provide notes to all of you to study various advantages in a much detailed way later on. Okay. So in an amalgamation, you will find various kind of activities like amalgamation, absorption, external reconstruction. So one important thing which you all must keep in your mind is that irrespective of whether it is amalgamation, absorption or external reconstruction, accounting treatment is same. Under the accounting standard 14, whether we have amalgamation, absorption or external reconstruction, we have to use same accounting treatment. Okay, but it is essential that we must know the differences between these three activities. First, amalgamation. Okay, in amalgamation, there should be minimum two companies, right? So let's take here for example, if I am taking two companies, there can be more than two companies. Okay, to make it easy, let's assume that there are only two companies. In amalgamation, you can see it here, right? Here, A and B companies. A and B companies will merge together and they will form AB company, which is totally new company. Okay, all companies will be liquidated. A and B will be liquidated. Their assets and liabilities will be transferred to AB company, totally new company. Okay. Whereas in the case of absorption, either A will take over the B company or vice versa. That means assets and liabilities of A Limited will be taken over by B Limited or vice versa. So as I said, here you can see that in this case I have taken A company as a company which is continuing its legal existence. B Limited has to liquidate in this example. Okay. So in absorption, all companies either one of the old companies will continue its legal existence and another company will discontinue its legal existence. Now I hope this much is clear to all of you. Now let's go to external reconstruction. In an external reconstruction, there will be only one company. Okay, unlike previous case of amalgamation, here one company will simply change its name and they will do necessary restructuring of their balance sheet, and they will form a new company having same shareholder. Okay, they will continue with same shareholder. Only thing is, because of the various problems in their business, sometimes their market reputation goes down, sometimes they have lots of problems in their balance sheet, so reconstruction becomes necessary and uh, they have to uh, they have to do external reconstruction in order to revive their business. Okay, one perfect example of external reconstruction is you have is like earlier we used to have UTI Bank. Okay, that UTI Bank was not performing well, and it has it had lots of losses from years to years, and its run value was also declining in the market. And there was a point of time when people stopped visiting this bank, and uh, in that time they had decided to do external reconstruction, and they corrected all the problems that they had in their company, and they came to the market relaunching relaunching themselves as Axis Bank. Now we all know that Axis Bank is one of the most prominent private bank in our country, and it is doing pretty well year after year. So sometimes external reconstruction becomes necessary in order to like revive business in the market. If external reconstruction doesn't work, then company might have to be shut down. So it is more or less uh, necessary for like reviving companies having a lot of problems. Okay, so so in the questions you can get either like two companies forming new company, or one company taking over another company, absorption, or external reconstruction type of problems. But we have to use same accounting treatment that we will discuss later on. So let's go to next point. There are some terminology in the amalgamation, and we have to know those terminology properly. We have to understand what is meant by transferor company and what is meant by transferee company. So first we have to let's see what is transferor company. Transferor company means the company which is amalgamated into another company. Okay, this is a company which is amalgamated to another company, and its legal existence will be over. Its assets and liabilities will be transferred to another company. Okay. So what is transferee company? Transferee company means the company into which a transferor company is amalgamated. It means assets and liabilities of the transferor company will go to the transferee company, right? And transferee company will be liquidated, and transferee company will continue its existence. Okay. Here I have one example. Your work is to identify transferor and transferee company. Okay, I hope it is not a big problem to identify transferor and transferee company. You can pause the video here right now, and you can find it. Okay. Now, another important point is purchase consideration. We have to know what is purchase consideration while solving problems in amalgamation. In case of amalgamation, purchase consideration is the agreed amount which transferee company pays to the transferor company. Okay, when you are buying anything in the market, you have to pay something for purchasing, right? Likewise, if transferee company is buying or taking over transferor company, then transferee company has to pay something to the transferor company, right? So such payment is called purchase consideration. It is paid in exchange of ownership, right? Transferor company's ownership will be transferred to transferee company, right? So they have to pay something to the transferor company. Second important thing is it can be in the form of cash, shares, or any other assets. Okay, as agreed between both the companies. Before amalgamation, there will be terms and conditions, right? there will be discussion and they will make some agreement. So purchase consideration can be in the various forms, and while doing problems, those terms and conditions will be provided in the question, and accordingly you all can understand the forms of purchase consideration. Here in this example, you have to XYZ Limited is purchasing the business of ABC Limited. So ABC Limited is Transferor company and XYZ Limited is Transferee company. Here the purchase consideration is in the form of cash and shares only, right? So in the form of cash they are paying 5 lakh, and in the form of shares they are paying 10 lakh. Okay, 1 lakh shares having value of each shares rupees 10. So 10 lakh plus 5 lakh is 15 lakh. Therefore, in this case, purchase consideration is 15 lakh. I hope it is clear with all of you what is meant by purchase consideration. We have various methods of calculating purchase consideration. Here I have provided 4 different methods. First one is net asset method. Okay, with using this method, sometimes you have to calculate purchase consideration. So in net asset method, we have to find out first total agreed amount of assets taken over. After that, total agreed amount of liabilities taken over. If you reduce these two things, then you will get net assets, and that value will be considered as purchase consideration. Okay. Now, to calculate total agreed amount of assets and liabilities, first you have to find out the assets and liabilities which are taken over, because all the assets and liabilities of the transferor companies may not be taken over by transferee company. They can it is up to the agreement. So in the questions it is provided, so you have to find out assets and liabilities which are taken over or which are not taken over. That is your first job. Second thing is you have to find out at what value assets and liabilities are taken over. Assets can be taken over at book value or more than book value, sometimes less than book value as well. So likewise, liabilities can be taken over at lesser value, book value, or more value. Okay, so those details will be provided in the questions, and you have to find out with these two steps you will get net assets, and value of that net assets may be considered as purchase consideration. Second is net payment method. Okay, it is given here. In net payment method, you have to identify payment made to the shareholders of the transferor company. So shareholders of the transferor company means equity and preference shareholder of the transferor company. Here we have to find out the various payments made by transferee company to the equity and preference shareholder of the transferor company. It can be in the form of shares, cash, debentures, or any other forms of payment as per the agreement. Okay. Then you add up those consideration of equity and preference shareholder, and total amount will be your purchase consideration under this method. Third one, lump sum method. In lump sum method, there will be a fixed amount agreed between the transferee and transferor companies at the time of deciding terms and condition of amalgamation. So that fixed amount can be considered as purchase consideration. This much only. The fourth one is intrinsic value or share exchange method. Okay, this method we will discuss later on. Right now I am going to skip this particular method. Now here we have to calculate purchase consideration using net payment method. Let me repeat once more. In net payment method, we have to find out payments made to the equity and preference shareholder of the transferee company. In this question, first you pause the video and read the question properly. Okay. Now let's begin. I hope you have read the question properly. Here X Limited is acquiring the A Limited. So our number one job is to identify transferor and transferee company. In this question, X Limited is transferee company and A Limited is transferor company. So our job is to find out payments made to the equity and preference shareholder of the A Limited. Number 1 point. Here we have three payments, right? Three consideration as agreed between the X Limited and A Limited. Point number 1 talks about equity shares payment, preference shares debentures to the equity shareholder of the A Limited, right? It means equity shareholder of the A Limited will get equity shares in X Limited, preference shares in X Limited, debentures in X Limited. Okay, so these all figures will help us to find purchase consideration under this method. Number two is talking about preference shareholder of the A Limited, right? What they are getting, they will get equity share in X Limited and preference share in X Limited. Okay, so this will also help us in calculating purchase consideration in this method. Third point talks about equity share in X Limited to the debenture holders of A Limited, right? So we are not concerned about payments made to the debenture holder right now, because our job is to find out payments made to the equity shareholder and preference shareholder of the A Limited. So point number 1 and 2 will help us in finding out for calculation of purchase consideration. So let's go to number 1. 50,000 equity shares of ₹10 each at the rate of ₹12 each. Okay, so 50,000 each shares book value is ₹10, but market value is ₹12. So they are issued at ₹12. Therefore, we will take ₹12 as our value of each equity share. Okay, 50,000 into 12 is 6 lakh, right? 50,000 into 12 is 6 lakh. So value of equity shares in X Limited will be 6 lakh for the equity shareholders of A Limited. Now let's see how much preference shares value they are getting. 8% preference shares of ₹10 each, right? Here I have missed something. Okay, 30,000, 8% preference share of ₹10 each, right? So 30,000 preference shares and value of each preference share is ₹10. So it will become 3 lakh, right? 30,000 into 10, 3 lakh. Okay. Third one is 7% debenture to the action of ₹2 lakh, right? So 7% debentures and total value is ₹2 lakh. So total amount is directly given. We will take that amount, and now we will get total payments to the equity shareholders, that is 6 lakh, 3 lakh plus 2 lakh, and total comes to 11 lakh. Okay. So second, we have to see payment made to the preference shareholders. Okay. Preference shareholders are paid 30,000 equity shares, and value of each share is rupees 10, book value, market value is rupees 12. So we will take issued value, and 30,000 into 12 is 3,60,000, right? And second, they are getting 20,000 8% preference share of rupees 10 each, right? So 20,000 preference shares, and the value of each preference share is rupees 10. Therefore, the total value will become 2 lakh, and if preference shareholders are getting 3,60,000 plus 2 lakh, that is 5,60,000. So if we add up total payments made to the equity shareholders and preference shareholders, then total value is 16,60,000. Okay. So using net payment method, we have calculated this purchase consideration. This is home task 1 for all of you. Here you all have to calculate the purchase consideration using net payment method. I will provide the answer in my next lesson, so you all have to do these home tasks, and I hope it will help you to understand the method in a much better way. Now, in this question, we have to calculate purchase consideration using net asset method. I have already told you how to use net asset method. Here we have mainly two jobs. First is to identify assets and liabilities taken over, and second thing is their values, right? Assets can be taken over at book value, more than book value, or less than book value. So that these two things, if done properly, then we will get our purchase consideration through net asset method. Here, Vishnu Limited was agreed to be acquired by Techno Limited. So Vishnu Limited is Transferor company, and Techno Limited is Transferee company. Let's see what are their terms of amalgamation. Just below balance sheet on first paragraph, Techno Limited agreed to acquire fixed assets at 10% above book value, right? So Vishnu Limited has fixed assets, and this book value is 9 lakh, and Techno Limited has decided to acquire fixed assets at 10% above book value. 10% of 9 lakh is 90,000. Therefore, Techno Limited will give 9,90,000 for the fixed assets. Whereas in the case of current assets, their current assets is also taken over by Techno Limited. It is mentioned in the question, but they are going to give lesser value, right? Book value is 2 lakh, but they will give only 1,50,000. So total assets taken over is 9,90,000 plus 1,50,000, right? So it is coming 11,40,000 assets taken over. Our second work is to identify liability statement. Okay? The liabilities are taken as book value. So we have two liabilities, 5% debenture and sundry creditors, and their values are 1,20,000 and 1,30,000. So total value will be 2,50,000. And now we have to deduct 2,50,000 from 11,40,000, and here we will get net assets for purchase consideration. The purchase consideration is 8,90,000. In this question, there are two parts. Okay, first we are told to calculate purchase consideration, and second to show the discharge of purchase consideration. Okay, what is meant by discharge of purchase consideration? Purchase consideration is one amount, and discharge means in what forms purchase consideration is paid. as I already told all of you that it can be paid in various forms: cash, equity shares, preference shares, debentures, or any other agreed uh, forms. Okay, so let's see here. It is given, right? The purchase consideration was to be paid 50% in equity shares of Techno Limited and remaining in cash. So whatever purchase considerations value we will get in first part, from that purchase considerations value, 50% we have to issue equity shares and 50% will be paid in cash. So purchase consideration is discharged in the form of shares and cash. So out of 8,90,000, 50% will be in the form of cash, so 4,45,000, and the remaining 50% will be in the form of 4 lakh in the form of equity shares. Assuming that the book value of each equity share in Transferee company is rupees 10, then we will issue 44,500 equity shares, and thereby we can show discharge of purchase consideration in this manner. Okay, I hope this much is clear to all of you. Now I have second homework to all of you, and in this question I want you all to identify. First job is to identify transferor and transferee company, and second job is to find out a purchase consideration using net asset method, and third job is to show how purchase consideration is discharged. All the details are provided in the question itself. You read it thoroughly and listen to a previous question so that you get better understanding, and it will help you to solve this problem. Okay. This is your second homework, and answer will be provided to all of you in my next lesson. So till then, you study well and have a good day.